Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 8th of October 2019, so welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts that we looked at this morning just to see how everything's getting along. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute an investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, but specifically our JFD research page, which you can find here under the research tab. And yep, I believe you can find a lot of useful stuff here. But for now, guys, as always, let's jump into the charts. Now, the first one I want to touch on here is the S&P 500. Now, yesterday the index closed slightly in the negative territory, and even though it's still looking at this 4-hour chart, we can see that after it reversed back to the upside here last week on the 3rd of October, it traveled higher, but kind of is currently failing to move above its EMAs here. And the last one here is the 50 EMA, shown as the red line on the 4-hour chart here. And looking at the cash index right now, it seems that the index is balancing, the cash index is balancing slightly below its 200 EMA here on the 4-hour chart. So in a way, this doesn't really paint a good picture here for the S&P, unless the buyers will see this as a good opportunity to step in again and push this one back to the upside. Now, basically, in other words, if it continues to balance around this 200 EMA on the 4-hour chart when the market opens up, then we could see basically something like this here. We could see a bit of a curve, and if, like I said, if it struggles to move lower below this, then we could see again another round of buying. The only problem with the upside here at this point is this little tentative downside resistance line, so taken from the high of the 19th of September. So in a way, even if we could see this index curving back up here, we will be very careful near this downside line, because in a way, if it holds, we could see another round of selling here. But of course, if it gets broken, then yep, we could consider higher levels again. Of course, the next level to watch could be around here near the high of the 1st of October, and that's around the 2,992-93 area. So again, this could be that nice area of resistance, and for those who are more on the cautious side, in a way, for those cautious bulls, I would say a break above this level here, the 2,993, could in a way do the trick here, and could open the path towards slightly higher levels. We will aim for the high of the 19th of September, and that was approximately around the 3,022 zone. But still, that's not the highest point of it's not the all-time high, because the all-time high is around here, around the 3,028 zone. So again, as you can see, how we're not far from those all-time highs again. But before we could consider a possible move towards this all-time high, we need to see a break of this down, not only this downside line, but also a push above the 2,993 level. Of course, this is a bit of a very cautious approach here, but to be honest, we'd rather be safe than sorry. But of course, the main question first is, will it actually manage to, let's say, if this downside line will manage to hold the price down or not, if we see a reversal back to the upside here. So keep your eyes on this one. If, let's say, the index decides to continue sliding below the 200 EMA, now again, this is a very bit little bit tricky because in a way it could also reverse somewhere from around here and then push back to the upside. So in a way, what we could do here is we'll keep an eye on this little intraday swing, or should I say, this intraday swing high of the at 2,897 zone. So if we see a drop below this in a way could open the path towards lower levels. We could see a slide towards the lows of last week near the 2,856 territory, and around there we could meet the well, one of the tentative upside lines here. And to be honest, don't focus really too much on these because this one that I've drawn, it only has two touches here, the touch here on the 5th of August and the touch of the 15th of August. So in a way, because somebody could even draw it maybe this way, or maybe a little bit higher. So that's why don't focus really too much on this upside line. It's here just for illustrative purposes. There we go. But again, probably the main focus here will be on some of these levels. So on the downside, we'll consider slightly lower levels if we see a drop below the 2,897 zone. But again, we will still keep an eye on this 200 EMA, because if it decides to rebound and push back higher here, then we could see a test of this downside line here taken from the high of the 19th of September, and then we'll take it from there. If it wants to break it, that's wonderful, but still, for us to get comfortable with higher levels, we need to see a push above the 2,993 levels. Keep your eyes on that one. Gold, very interesting movement here in gold, and this morning I talked about gold as well, and basically what I was saying that as long as we kind of remain below this 1495 level, we could continue targeting lower areas. But as you can see, it quickly reversed back to the upside. It broke back above this 1495, 96 territory, pushed above all of its EMAs on the 4-hour chart, and now it's and hit its R1, which is around the 1507 and a half, something like that territory. Still, what I was saying, that even if we see such a move, if this continues to respect the boundaries, especially the upper bound of the falling channel formation here that gold is within right now, we will continue aiming lower. We will continue aiming lower. We will continue aiming to the downside. So in a way, yes, we are having a nice pop here to the upside. But if it travels further north, we will consider the lower side of the falling channel as a potential area of resistance. If it struggles to move above it, then we could see probably another round of selling. So that's why I keep this idea in mind. For us to start looking at higher levels, maybe ideally we would like to see a nice good daily close above this falling channel, and maybe just an additional confirmation, a break here above the 1525 zone. So this could, in a way, do the trick here for more buyers. So that's why, guys, yes, it is making a nice move higher, but don't get your hopes up yet, or should I say the bulls should not get their hopes up yet. We still need to see a few breaks here before we could examine much higher levels here, maybe even going back towards the 1557 zone marked near the high of the 4th of September. So again, like I said, for now we are still within the falling channel formation. As long as the boundaries are respected here, we will continue aiming lower. Jumping into a few pairs now very quickly. USDCHF. Now, I talked about this one yesterday, and basically what I was saying, guys, to keep an eye on this rising channel formation here. We were still hanging around here, and even this morning, yep, we were still hanging around the 0.994750 territory. So but you can see that it took a hit, it took a dive, and dropped below the lower side of the rising channel. Now, that said, of course, what I was saying in even my previous videos, in order for us to consider further declines, not only that we need to see a break of this lower side of the rising channel, but also a drop below the 0.99 zone right here, and ideally a daily close would do the trick here for them, for the sellers, and we could see this one sliding further down, maybe towards the 0.98, 48, 50 territory, around there. That could be a nice good target. But for now, guys, yes, we are currently trading below the lower side of the rising channel, but again, we in a way this could end up being as a nice false breakout, especially if you look at the daily chart, and this false breakout kind of on the daily candle could be a nice move here. So that's why for now we're just keeping an eye on this one. We're neither bearish nor bullish. We're just going to see how this is going to play out. If, for example, if we see a daily close below this territory, below the lower side of the rising channel, but still above the 0.99 zone, we are still going to remain somewhat neutral because, like I said, a drop below the 0.99 zone and ideally a close below that level, this is what we would need in order to consider further decline. So that's why for now, guys, keep your eyes on this one. In terms of the upside, for us to get comfortable with higher levels, again, push above the 0.9964, 65 territory here would kind of help us to kind of consider higher levels again. So that's why for now the upside is slightly off the table. The downside, yes, could be, but we still need some confirmation breaks here. GBPNZD. Another interesting one, and also something that I've mentioned this morning, guys. This morning we were hanging around here near the 1.9450, something like that, maybe just slightly above it. But you can see, and this is what I was talking about. So in order for us to consider further declines, we needed to see a nice, good, firm break here, and firm break below the 1.9412 territory, and then we could consider further decline, and our first target would be around the 1.93 zone, which, as you can see, it could get tested today if it continues sliding, but to be honest, this is going to be quite an interesting level of support. If it holds, we could see a nice rebound and a push back up here. So in a way, for now, given kind of reading the current technical picture, this is the scenario we could see playing out. So basically, if the 1.93 territory holds, we could see a nice rebound and a push back up here towards the 1.9412, or maybe not move all the way here, but basically as long as it remains below this level, we will continue targeting the downside. And one of our main targets here is around the 1.91 territory, but again, before we could examine that, we need to see a drop below the 1.93 zone. So for now, the pair is just moving towards that level. Let's see how this is going to react, how this level is going to, if it's going to hold or not. If it does, then yep, we could see a bit of a correction here back up. But if the rate stays below the 1.9412 territory, then yep, we could see another round of selling. If it travels suddenly back above the 1.9412, this is our neutral territory, because for us to get excited about the upside, we need to see a nice good push. Well, initially, of course, a break above this downside line, and then maybe just an extra push above the 1.961820 zone, approximately around there, and then we will aim for higher levels. EURGBP, something that I've mentioned this morning, and we were still below this key barrier that I was talking about, guys. I was saying that if we get a nice push above this, then yep, this could be opening the path towards the 0.897475 territory here, or even we could see a further move towards the psychological 0.90 level, and we had a perfect hit of the psychological 0.90 level. So now the pair is kind of stalling just slightly below it. In a way, one of the other targets that I was mentioning was the 0.9015. So in a way, there's still a bit of chance for EURGBP to continue moving higher, test this level, and if it struggles to push above this 0.9015, then we could see another a bit of correction here, maybe move back down towards the 0.8975 to test it from above this time. And then we'll take it from there, because at the moment, yes, it had a nice already pop. Like I said, this morning I was talking about this one, and we were still hanging around below the 0.89 37 territory and below this 200 EMA on the 4-hour chart. But look at this fantastic move. So anyone who caught this move, congratulations. For now, I would say that in a way, there is still a possibility to kind of move towards the 0.9015 zone, but in a way, if it doesn't, then we could see an earlier correction. As long as it's going to remain above this 200 EMA here, we will continue targeting the upside. So in a way, we could see a slide back down if this area gets tested again, the 200 EMA gets tested. If it holds the rate from moving lower, then yep, we could see another round of buying here and maybe some much higher levels again. But again, for now, let's see how this day is going to play out, and probably we'll have a look at it tomorrow again just to see how everything's getting along here, because it's quite an interesting pair. And the last pair for this session is going to be euro dollar, and also I talked about this one this morning. So in a way, again, I'm gonna stick to my words. It's annoying. It's really not doing anything. So it's just whoever's scalping this one probably is really and having a time of their lives. But basically, for now, we're still waiting. For now, we're waiting. We need to see a drop below the 1.0943 territory around here before we could examine, let's say, some downside here, maybe a move back towards this 1.090405, or even going lower. And with the upside, you can see that today the pair also tried to move higher, tried to make its way towards the 1.10, but failed to do so. So we're still waiting for that break of this 1.10 territory in order to kind of consider a possible test of the this downside resistance line taken from the high of June. But still, for now, at this point in time, for us to get comfortable with higher levels, we need to see a push above the 1.1024 zone, so only then we will aim for higher levels. I mean, don't get me wrong, this could in a way continue ranging here, could continue kind of ranging up until it actually tests the downside line. Of course, it did happen previously on some other pairs, and we saw these types of movements, so it could continue ranging here and just automatically test the downside line, and then kind of make a nice pop here, and basically the potential breakout level could be then the 1.10 zone. So, but again, that's something a little bit further down the line if this decides to travel all the way here towards this downside line. So for now, if it pushes above the 1.10, still it would need to overcome the downside line here, the 200 EMA, and this 1.1024 territory before we could examine higher levels. So that's why the bulls should not get their hopes up if we get a nice strong push above the 1.10s. This is the level that we need in order to consider higher levels, because then the path could be cleared. Up until then, we do have too many barriers here, so that's why, guys, keep your eyes on this one. Probably the longer it's going to start ranging, the bigger the blowout is going to be. So that's why, guys, keep an eye on this one. It could be quite interesting, and let's see how this is going to play out. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, and that's 6 o'clock GMT time. As always, yep, I hope you have a wonderful evening, guys, and I'll see you later. See you tomorrow. Thank you very much, and bye-bye.